Okay, so a very astute subscriber sent to me an email the other day saying, "Hey, Mike, I've been looking at EU exports. EU exports basically have fallen since Brexit down about 20%. Uh, isn't that bearish for the euro? Because how long will the exporters be able to go without cutting prices to sustain market share?" Now, that is a very, very insightful comment that he sent to me, and it shows that this person really understands because when it comes to exchange rates, it's all about it's all about price setting. In every market, it's about price setting. It's not about quantity, it's about the price. Somebody sets the price at which a deal is done. It could be a monopolist, as in the case of a government setting the price of credit when it adjusts interest rates, or it could be, in the case of exchange rates, large exporters when they cut prices to sustain market share. That is a de facto devaluation of the currency. It is reflected immediately in the foreign exchange value of that currency. So he made a very good point. He said, when will they start to cut uh, prices? And that will reflect in a lower foreign exchange rate for the euro. Now, for those of you who have been following me, and if you have the MMT Trader Report, you know that I am short euro pound. Okay, and I got into that position, a month or month and a half. I originally was in that position. I made money on it. I got out, then it rallied. I shorted it again. I shorted it again. I shorted it again. So I'm short from a level below the current level. I got caught up in the flash crash. I was not stopped out. Okay, I'm still in it. I pay with time, not with money. And that position will work out as a profit for me. And if I have to wait, I have to wait because, again, I pay with time, not with money. I'm not a loser who pays with money. But the point that he was making, it factors into the whole outlook because ultimately, if you're losing exports, if you're losing market share, if exports are the main driver of your economy, which in the EU, especially for a country like Germany, which is the dominant economy in the EU, yes, that is a very important point, is that at some point they're going to start cutting prices, which will be a downward adjustment in the euro. Not to mention the fact that in the EU, certain member states like Spain and Portugal are running deficits in excess of the EU rules, but no fine has been imposed. And I have explained in the past that has sort of been a tacit, green light, winking of the eye, like go ahead and do that. So it's a fiscal expansion, even though you're starting to hear some rhetoric now from some people who are saying, well, you can't be doing that, Spain. You can't be doing that, Portugal. We'll see. Right now, they are doing it. So, but here's the thing I wanted to point out. In doing my research for the this week's issue of MMT Trader, I like to look at the CFTC's Commitment of Traders report because it gives the breakdown of who's long, who's short. I like to look at the net speculative position. The net speculative position would be taking all the long open interest minus all the short open interest and seeing what their net position is. Now the CFTC gives a very detailed breakdown where it's not just a general breakdown of reporting positions and non-reporting positions. They also have a more detailed breakdown where it shows swap dealers. Those would be Wall Street firms like Goldman and JP Morgan and Citi and Bank of America and Morgan Stanley. Then they have, commercials, people who could be in the trade. If we're talking about a physical commodity like oil, those could be oil producers or merchants. And then they have the speculators. They would have leveraged money, which would be like futures funds and hedge funds. And then they would have non-reportables. Those are small speculators. But they also have, when it comes to the currencies and the financial futures, they have a category called asset managers. Now, asset managers are different from futures funds and hedge funds. Those would be like the Black+Rocks, the Fidelities, the Vanguards. These are these big institutions that manage, in some cases, trillions of dollars of assets on the part of other institutions like pension funds or large investors or whatever. And so I was perusing that over the weekend and with the currencies just to see the breakdowns in certain things like British pound, euro, whatever. The CME trades a euro pound cross. Okay, so they have a euro British pound futures contract. So I went over there to look at that, and in the asset managers category, again, that's like BlackRock, Fidelity, Vanguard, all these big asset managers, they were long 17,000 contracts of euro pound and short zero. Zero. Now, I have never seen that before because in every category of trader, there are people or market participants on both sides of the trade. Now, sometimes it might be really skewed. Like I've seen something like, maybe 300 longs on one side and 30,000 shorts on the other side within a category, let's say speculators. But I have never seen not even one open contract, on one side or the other. And so you have these asset managers who totally bought into this meme, this idea that the euro is going up against the pound. In other words, the pound is going down, the euro is going up. 17,000 longs and zero shorts. Every single asset manager who has a position in the futures markets in euro pound, every single one is long that contract. There's not even one contract short. It's amazing. It is amazing. You talk about extremes. And again, these guys go to Black+Rock, and I have, I've written about Black+Rock several times on my blog. I don't know if I did anything on these videos, but Larry Fink, who's the head of Black+Rock, smart guy, but I've heard him at times. I caught him at times, again, with this out of paradigm thinking, these wrong statements about debt, about deficits, about the Chinese lending, about interest rates, if the debt gets too high, like all these things that are totally inapplicable. So, they bought it. They bought it hook, line, and sinker that the euro's going up, the pound. Now, I don't know if it's Black+Rock. They don't give the names of the institutions, but I assume that's the biggest asset manager in the world. Not a single short. Now, I'm short. So it's me against all. It's little old me against trillions and trillions. Okay? Let's see who comes out the winner in that one. Let's see. That's all I got to say. Not a single short. Not a single short. How about that? Just little old me. Bye.